Good day, ladies and gentlemen, once again. This question is on chapter 8 of your textbook and is based on integrated accounting system. And there are two topics there. We have interlocking and we have financial accounts separately. But our focus is on the integrated accounting system, not interlocking. Chapter 8, I just want to begin with the requirements so that we see what we are required, and I will be explaining more even than what is provided. We are required to prepare the following ledger accounts for the period in the company's integrated general ledger. Remember, the word integrated, it means you are integrating two things. So the minute we integrate two things, then that becomes integrated, meaning we are integrating cost accounts with the financial accounts. Remember, cost accounts, we speak of the production side of the company, and when the product is completed, then that will be a finished product where the product needs to be sold. Then that becomes financial accounts. So that is the integration of the two, because some companies, they produce a product through the conversion of the raw material using the conversion cost, and that becomes a finished product and they sell to a customer, which is the integration of the cost accounts and the financial accounts. We are then required to do a ledger account on the raw material control, wages control, production overheads. Then after work in progress, which is the production department, that is where the process of production takes place. Then after the finished goods control account, and the last one is the cost of sales. Number 2, we are then required to prepare or calculate the gross profit and net profit for the period. And gross profit and net profit for the period emanates from the normal income statement. So now we start with the raw material. Remember, raw material is an asset. It is a type of inventory. When I'm saying a type of inventory, it is the inventory of raw material, because we have inventory of raw material, inventory of finished goods, and inventory of the work that is still in progress. But this is the inventory of the material that still needs to be converted into becoming a finished product. The second ledger account, it is the wages control, and we know that in the wages control, these are the wages of the employees that are directly or indirectly involved in the production of our goods and our product that we are producing. So this becomes our wages control. Then we will be explaining all this in details and recording all the necessary transaction. Then the other one, it is production overheads. And we know that under this account, which is production overheads, we look at normally the two things, the actual overheads and the applied overheads. The actual overheads and the applied overheads. And on this right hand side or the credit side, we record the applied overheads, and on the debit side, we record the actual overheads. So now we'll also deal with all those dynamics in this question. Then the next ledger account, it was the work that is still in progress. So we have work in progress, and remember, this abbreviation is fully acceptable. You can use it at any time where necessary. Then after we have finished goods and cost of sales, goods that are no longer in the process, then they become finished goods. Goods that are no longer in the process, they become finished goods, meaning the amount to be recorded in the finished goods will be coming from the work that is still in progress. Then after, when goods are done and they are finished, we sell them, and we need to record or acknowledge the cost of the goods that we have sold, which is cost of sales. how much is the cost or was the cost of the goods that we are selling. So now these are the required ledger accounts that we will be looking at in this question. Remember, we start buying material. I want to highlight this process. We start by buying material, and we use we use wages, or we use laborers and overheads to convert this material. So we use conversion cost to convert this material so that this material is converted in the production department. So the conversion cost are incurred in the work in progress, and all the costs are allocated there. Then when the goods are done with the process, they go to the finished goods department. So we buy material, convert it using direct labor and overheads, conversion cost. Then after it will be finished from the work that was in process, then it will be a finished product. That is the simple process and is the process, just in my own view. Then now we will do number 2 immediately when we're done with these ledger accounts. This is the previous year class test 2012 class test 1. It was out of 40 marks, and it's a very easy question to tell the truth. Remember, I also do have other recordings that are more than this, ledger accounts and also general journal. But this question is only on the ledger account. A company manufactures a product called product A. So this is the name of the product, only one product. In the period just ended, production started and sales for product A were. So now, in the period just ended, production started and sales for product A were. So now in the production that ended, meaning the previous production, we started in production with 52,000 units, meaning units started or stated in production. Then our sales 47,000 units that were sold. Then the selling price being 40 rand. Then that is the information given to us, and we have our opening stock. Our opening stock were 85,270 in terms of the material. We also have our finished goods as 95,400, and these finished goods in total number is 3,816. The finished goods, this is the opening stock. Remember, opening stock of finished goods is 3,816. However, started in production was 52,000 units. Then we have work opening balance that is in progress. Opening balance of the work that is in progress, it is 18,970. That is the work that is in progress. Now we can record these opening balances as they are. Remember, the 40 rand of the selling price and the units that were sold will be used when we are busy, or when we respond to the gross profit or the net profit, which is the selling price minus cost of sales, gross profit minus any other non-production cost. So now we'll be using that later on, but the opening information balances can be recorded at this point in time. 85,270 is the raw material opening balance. So now we can have our opening balance of the raw material as 85,270. That is our opening balance, meaning the balance that we started, or we can say balance brought forward. So that is our opening balance. We have our opening balance for the goods that are finished, 95,400. It is the cost of goods that are already finished. So we go to finished goods on the debit side. Remember, finished goods is inventory, and that is 95,400. Remember, inventory is an asset, and assets increase on the debit side. That is financial accounting 1. Then we have balance brought down. Then after we look for another balance, opening balance of the work in progress, meaning under work in progress we must record the opening balance, and that opening balance is on the debit side because this is an asset. Inventory of work that is in progress, 18,970, if I still remember, 18,970. We are just recording the opening balances. Opening balances on the debit side, all of them because they are assets. Remember, overheads and wages control don't have an opening balance. Then now we go straight to the information provided. Raw material purchases on credit, meaning we bought raw material on credit during the current year. Then we know that when we buy anything on credit, our creditors control will be affected. So now, meaning we bought more material, then our material will increase on the debit side. And we need to say, because it was brought on credit, then this should be creditors control. And we record the amount of the material that was bought on credit, which is creditors control of an amount that is 250,000 rands. And that was direct material, or that was material that was bought during the year. Combination of both direct and indirect. 250,000 rands is the material that was bought during the current year. Then after we read further and see what are they saying regarding material in the same paragraph. It says direct material issued to the production department. Remember, production department is work in progress. It was 480 per unit of product A. It was 480 per unit of product A. How many units started in production? We started with 52,000 units. So now that will be 480 times by 52,000 units. That will give us the cost of the direct material that was issued to the production department, which is work in progress. So that will be 480 cents times by 52,000 units. This will give us 294,600. That will be decreasing our raw material. Remember, raw material is an assets, and assets decrease on the credit side. So now here we have 249,600, where now our material is decreasing. Why? Because we are transferring it to the work in process department. Remember, work in process department is the production department. And once again, for every credit entry, there should be a debit entry. That is why the 249,600 is recorded on the debit side. Just verify if the amount is captured correct. 249,600, yes. Then this is raw material control. This is from the raw material control account, where material was taken from the raw material ledger account and transferred to the debit side of the work in progress, where the work in progress is increasing whenever more material or more costs are incurred in this department. Then after we then now come to the other information. Remember, they did not tell us about the indirect material. They only told us about the direct material. And I want to emphasize the fact that the issue of the direct material from the material control account goes straight to the work in progress. But the minute it is indirect material, that will be transferred into a different department, which is manufacturing overheads account. That is where the indirect material gets to be recorded. Then now let us go to our next transaction. Next transaction says direct labor hours worked during the period is 108,000 and the wages that were paid by check amounted to 9 rand per hour, meaning 104,000 that we multiply by 9 rand per hour. This will give us 936,000. This will be 936,000. Remember, this is direct laborer, meaning all the direct costs are recorded on the debit side of work in progress. All the direct costs are recorded on the debit side of work in progress. Now that means here we need to record our direct labor as 936,000 rands, and this will be wages control because these are the wages that are recorded under our work in progress. So now this will be our wages control. Remember, the cost of production, it is direct material, direct labor, plus applied overheads. I want to highlight the fact that plus applied manufacturing overheads. This is what we want. We do have direct material during the year. We do have direct labor. Then what else do we need? We need to add our applied manufacturing overheads. So now we have recorded this on the debit side, meaning it must go to the credit side of the wages control account. Now under our wages control account, we then need to record the amount of 936,000 rands, and the contra entry will be work in progress. Always the direct costs are recorded on the debit side of the work in progress account. So now we then continue in that same note. For every debit entry, once again remember that there should be a credit entry. So we are done with the direct cost. Please don't forget that the actual labor hours amounted to 104. Why am I highlighting this? Is because in the case of a labor intensive company, our overheads are normally absorbed based on labor hours, unless the company is more machine intensive. Therefore now machine hours will be used to calculate our predetermined overhead rate. Then now we go to our indirect information, that is on the second paragraph. Indirect labor cost paid during the period are 19,650. Remember, all the indirect cost must be recorded under our production overheads because over or indirect cost are manufacturing overheads. We had 19,630, and this is our wages control. This is from our wages control. Remember, these are what we call wages, but they are indirect wages. Previously, we dealt with the direct wages, and I said to you that the amount of 936, which is direct wages, must be recorded in the work in progress. That is why under our work in progress, we had the amount of 936,000. The contra entry was work wages control. So now we recorded that for such a reason, but any of the indirect costs go to the manufacturing overheads, and in that specific account being wages in this case. So now we have this recorded under our production overheads, and the contra entry is wages. So this must still be recorded in our wages account as 19,630. And the contra entry for that will be production overheads, because this amount comes from our production overheads account, which is production overheads account. This is our production overheads account. Then we have captured that correctly. For every debit entry, there should be a credit entry. And now once again, all the overheads go to the overheads cost. Remember, overheads are the indirect expenses or indirect cost. So the indirect production labor cost we have captured, and production overhead cost paid other than direct or indirect labor were 238,430. So these are the other production overheads. So now we are not required to record the ledger account of other overheads, but under our overheads we need to record this 238,420. Now it was paid, remember, because it was paid, then this has to be bank, meaning if a ledger account for bank was required, we will also have to record this on the credit side of the bank account because money was paid but no accounting was taken into consideration. Then after we have captured that, remember there will be no other account except bank if a bank was a required ledger account, but it is not in this case. Production overheads are absorbed at the rate of R2.50 per direct labor hour. Remember I said please master or take those labor hours into account. Why so? Because in a labor intensive company, then most of the time labor hours, direct labor hours will be used as a base to allocate our overheads. Now in this case our POR predetermined overhead rate is R2.50 per direct labor hour, meaning we can calculate what is called applied manufacturing overheads. Applied manufacturing overheads. Remember, applied manufacturing overheads, it is POR times by actual base. POR times by actual base. Our POR is provided to us as R2.50 and our actual base is 104,000. Remember, these are the actual hours, direct labor hours worked. This is not budgeted, but it is actual hours. So now this will give us the total of the applied or estimated manufacturing overheads. So this will be 2.5 times by 104,000 hours, and this will give us 260,000 rands. And this 260,000 rands is then what we call our applied manufacturing overheads. And I said to you that the cost of a production or the cost of a product, it is direct material, direct labor, and applied overheads in the context of this topic. I want to highlight that in the context of this topic. Then after we have our applied overheads, remember this will go to our production overhead. This is production overheads. Production overheads. Just verify the naming is production overheads. Production overheads. Our production overheads are 260,000 rands. 260,000 rands. 260,000 rands. So now in this 260,000 rands, what does this mean? Remember, I highlighted to you before. I said that on this side we record, it was not this one, I said on the side of the debit side of the production overheads, I said here we record actual overheads, and this is the actual indirect wages, the actual other overheads that we paid for air cash. Then on the credit side we record the applied overheads. Where is the applied overheads coming from? It is coming from the ledger account called work in progress. For every debit entry there should be a credit entry on the production overheads of 260,000 rands, and that will say work in progress because that is where this amount is coming from, or the contra entry for it. So now we know that on the debit side of the work in progress, what do we record? We record opening balance, we record direct material, we record direct labor, we record applied overheads. Then after we record what else? And I think these are the only three, unless there is a correction to be made or a reversal or a return where necessary. But I'm not going to be going to those undisclosed details now. So now the debit side will definitely be greater. Then we will then have to know how many units were finished. So now our work in progress is made of these three for amounts: 18,970, 249,600. Then now we can then look further and on any information that we have. Just clear there. We are then now told further that any over or under absorbed production overheads are adjusted against the cost of goods sold for the period. And units of product A with a total cost of 128,315 were finished. So this is the portion out of the work in progress that was finished. So the remainder will be closing work in progress. 1,288,315. Let us check if that is what was finished. So now it is 1,288,315. So now this is the value of the goods that were finished. So now in other words, if we then come now to our ledger account of the work in progress, we need to say the portion which is 1,222,800 just verify it was 1,228,315. 1,228,315. So that I just thought this amount is too big. I did not notice that there are figures that can add up to that amount. I can say there's 936, there's 249, there's 260. So now I understand. I was wondering why 1 million. Now I thought it's too big. So hence I was writing and thinking at the same time. So that means the difference will be the balance carried down. So now we need the total of the debit side: 260,000 plus 936,000 rands plus 249,600 plus 18,970. Then this will give us 1,464,570. 1,464,570. Then we deduct what was finished: 1,228,315, and this gives us 236,252. So now this is the balance of the work that is still in progress, which becomes an opening balance next period: 236,252. And this will be our balance that is brought down. I want to highlight the fact that our opening and closing balance is not classified into material, labor, and overheads, but it is the combination of all those three. Remember, during the year we introduced we put more material. There was direct material, and we incurred direct labor, and we incur overheads. Now the closing inventory include overheads applied, include wages, include material. We don't divide it, but to some topics they will say opening was this amount of material, and opening was this amount in terms of labor, and opening was this amount in terms of overheads. So be aware why they can split this into three and say direct material in that opening was this amount, direct labor was this amount, and manufacturing overheads were this amount. Why? Because this amount is the remainder of the material, labor, and overheads. So please have this at the back of your mind, because as you continue with the next chapters, chapter 9, you'll get to experience all of that. But you'll deal with it at that level. Now, we then have completed the ledger account for the work in progress. Then now we can go to the other transaction, which is the transaction that says the finished goods left after the sales of 47,000 units had a value of 133,885. Take note of the difference between the previous one. In the previous one, we were given the goods that were finished. Remember, once again, something that we have not recorded. Thank you for that. The goods that were completed that are worth 1,228,813, they are finished. So they're supposed to go to the finished goods account. They're supposed to go to the finished goods account. And now that will be transferred to the debit side, 315. That comes from work that was in progress or work that was in process, which now is no longer in process but finished. And in this other type of the question, they told us how much is the closing inventory. They did not tell us how much was sold. So now we need to just record our balance carried down. And our balance carried down, which is closing inventory value, it is 133,885. 133,885, 133,885. And now meaning the difference between what was available for sale and what is left at the end of the year, then will be the cost of goods that were sold. Then now let us continue on that same note. Then we'll say cost of sales. What is the cost of the goods that were sold? If the cost of what is left is this, and what was available for sale is what I'm about to calculate. Let us check how much was available for sale. Available for sale is 95,400 plus 1,228,315. And this gives us 1,323,715. This is what was available for sales, 1,323,715. So now this is what was available for sale. But if this is what was available for sale from the finished goods, and we only left with 133,885, that means the rest was sold. So now we say minus 133,885. This gives us 1,189,000. 1,189,830. Meaning this is the cost of the goods that were sold. Meaning the goods that were sold costed us that amount in total. But remember, we can calculate also the cost per unit. And I don't want to verify this because I've not tested it before, because I might verify yet the examiner did an error. When I'm saying the examiner did an error, I'm meaning that we can calculate the cost per unit. When I say the cost per unit, remember, we know that the value of the goods that were finished amounted to 1,228,315. Then we can divide this by the units that were manufactured during the period to get to the cost of production per unit. Then we multiply by the goods that were sold. That will give us the cost of goods sold. But I don't want to go there and test something that I did not verify before. Now we have sorted the balancing of the finished goods ledger account, but we just need to write our balance that is brought down. And our balance that is brought down is the same 33,885. Then the finished goods ledger account is completed and is done and dusted. Then let us not go to cost of sales yet. Let us go to another ledger account in the beginning. Now, in the beginning, we have two ledger accounts that we must first take into account: the material, because there was no return. So if there was no return, then we can sort out our material control account. Then total of the material control account will be calculated in this manner, where we say 85,270 plus 250,000. Then you say the material that was available for issue is 335,270 and 335,270 is the material that was available for issue, direct material. Then after we now need to take into account the closing balance. Then after we have the balance, that is balance carried down, and our balance carried down will be the difference minus 249,600, and this gives us 85,670. 85,670. Then this will be 85,670. Then this will be our balance that is brought down. I want to highlight something that is very crucial, that is not part of this question. That's why it makes it very easier. If there was indirect material that was issued to the work in progress, indirect material will be recorded on the credit side of the direct material, but the contra entry will be production overheads. Meaning the indirect material, remember, is an overhead. So now any indirect material will go to, on any indirect cost will go to the production overhead. So this amount will be recorded under our production overheads on the debit side, because I said these are actual manufacturing overheads. So that will be recorded on this side. I don't want to forget that, because it is quite important, and you'll get to meet it in another question. More than 90% chance that you'll get that assessed. Then we now go to our direct labor ledger account. Then our direct labor ledger account, we will have the total, which is our bank. I want to check if did we pay for these wages or they were not paid for. Let us verify that. If they were paid, then we can use bank. If they're not paid, then it will be wage payable. It says direct labor issued 480 per unit. Direct labor hours worked was 104,000. Then the direct wages were paid by check. The direct wages were paid by check at a rate of 9 rand per hour. So now, obviously, when direct laborers are paid, then also indirect laborers will also be paid. So now the contra entry can be bank. Then if we say bank, now we have to say 936,000 on the credit side plus 19,630 will be 955,630. 955,630. This is the amount that was paid in terms of wages. So now again, your bank account will have to be credited by the amount that was paid. 955,630. 955,630. 955,630. Remember, if this amount was not yet paid at this period, or it was just incurred and paid later on, then we need to say here wages payable. Wages payable. Remember, wages payable is an accrued wages, meaning a liability expense not yet paid. Therefore, now we'll have to open a ledger account for wages payable, where this amount will be recorded on the credit side, increasing the liability, indicating that these wages were not yet paid. Then when the wages are paid, therefore now we can then reduce the liability with the payment, meaning the double entry will be bank on the debit side, reducing the wages payable, not the wage control. So please have this at the back of your mind, but also there in other questions. Then wages control are done. Then we go to the production overheads, looking first for the bigger side. 19,630 plus 238,420 gives me 258,050. Under production overheads, 258,050 is less than 260,000. So we can say minus 260,000. And we see the difference. Where is the difference? So 260,000 is the bigger amount and it is the bigger side. So we always take the amount from the bigger side, and the difference will fall on the smaller side, 1,950. Remember, there was a sentence that said that over or under applied manufacturing overheads is absorbed against the cost of goods sold. Any over or under absorbed production overheads are adjusted, yes, they say are adjusted, the right wording, are adjusted against the cost of goods sold for the period, meaning the difference between over and under applied, or the difference between actual and applied, goes to cost of sales. So hence the contra entry here, it is cost of sales, meaning the cost of goods that are sold. So now under the cost of goods sold, this amount should be appearing on the credit side of the cost of goods sold. Then the contra entry will be production overheads. It will be production overheads. Production overheads. Then that will be 1,950. Then we know that there are goods that were finished, and the goods that were finished were also sold, and the goods that were sold were 1,189,830. So that will be 1,189,830. That is from the finished goods. Finished goods. So that will be the cost of goods sold. Then after now, we need to determine what we call trading account amount, meaning the amount that will go to the profit and loss, or the net sales. Then this will be trading account. Remember, this is the amount of the cost of sales that will go to trading account. Trading account. Then the amount that will be recorded there, let us check how much will be it. Then it will be plus 1,189,830, and this will give us 1,187,880. This is the amount of cost of sales. Remember, we estimated, just want to highlight one last thing, we estimated that our overheads will be 260,000. That was our estimated overheads, and we recorded this estimate in what we call work in progress, meaning that 260,000 increased our cost of production, and our cost of the goods that were finished, which is this amount, is inclusive of that 260,000, which is an overestimation by 1,950. That is why now that applied overheads, which is 1,950, is then now affecting our cost of sales negatively on the credit side. So now cost of sales are done. The next part is only the gross profit. All the ledger accounts are well balanced. Then our number 2, where we're calculating our gross profit, then we just say our sales, and we sold our product at 40 Rand, if I still remember, and there were 47,000 units that were sold. I'll just verify that, just still in my mind. We sold our inventory at how much? We will take this in the income statement that we're busy with it now. The selling price for product A is 40 Rand and sales is 47,000 units. So our sales revenue will be 47,000 times by 40, and this gives us 880,000. Then after we say less cost of sales. Our cost of sales amount must be the same amount that you got in your cost of sales ledger account, 1,187,880. 1,887,880. The difference between the two will give you the gross profit, 1,887,880, and this gives you the gross profit of 7,880. Then we get to what we call gross profit. Now, if we get gross profit, we need to deduct other operating expenses, which is admin and sales. We have administration costs that I said we need to take them into account when we are doing the income statement. Remember, we have admin and sales expense total 222,800 for the period. These are non-production costs. They must not be part and parcel of the cost of sales. Then we have that admin and selling expense, admin and sales expense. The admin and sales expense is 122,800 is our admin expense, 122,800. Then after we can say plus 122,800. Remember, this is a minus. We have 114,920 as our net profit. However, this is profit for the period. We still have tax and other expenses that might, most especially tax, that will need to be taken into account. With that, guys, you've been wonderful, you've been awesome. This is very basic and very simple question, to be honest. But watch other two questions that I have and other more questions that I have on this chapter that are more broader than and in depth than this. Thank you guys very much.